I think the biggest risk we're about to take for, let's say, 3-year risk
Hmm.
is a ridiculous bubble. I think there is a growing, big, huge possible narrative of having a 1999 style bubble. I think if there's a risk of that, then you get an overhang, and you could skip a crypto cycle, you could skip a tech cycle like we did back in 2003 to 2007 or something like that. So that's the biggest risk. I think all left tail risks have been removed.
That was Raoul, CEO and co founder of Real Vision, telling you what he thinks the biggest risk is for Bitcoin and crypto over the next couple of years. And as you can see, he says it is a bubble. But I know you guys read the title. We have big news coming tomorrow for Bitcoin. And we're going to be checking out more of what Raoul thinks about this crypto market, where he thinks crypto is going, gives you advice on how you should be playing the crypto markets right now, and some of his other thoughts in a recent interview that Raoul just did. But before we get into that, there is massive news coming tomorrow. It's an important week for Bitcoin and altcoins. This week, we've got CPI, PP, and the Fed meeting. CPI and the Fed meeting are on the same day. That is tomorrow. And we did have that sell-off before the Fed meeting like we normally get for Bitcoin. But why is this important? Because if we get a CPI number that is similar to March's numbers, where we actually got worse inflation, we didn't beat expectations. Expectations actually were lower than what was expected. That is not good. So on April 10th, when the CPI numbers came out for BTC, the price of Bitcoin, you can see, dropped around 5% on the day, and it continued to drop throughout May. It dropped 22% because people were thinking inflation was coming back, and that's not going to be good for Bitcoin because the Federal Reserve is not going to lower interest rates. And we really didn't have a big rebound in Bitcoin until the next CPI reading. The April CPI report showed a slight inflation easing. So we modestly beat the expectations. We came in 0.1% lower on the total CPI number. And on that day, Bitcoin went up from around 62,000 all the way up to 66,000. It grew $5,000 in one day, and it made an 8% move. And it continued up all the way to around 72,000, up 17%. So it looks like this CPI number that we get tomorrow could be Bitcoin going down 20% over the next month, or Bitcoin going up 20% over the next month if we have similar price action to the past 2 months. So this is huge. You need to watch out for this report tomorrow. The numbers come out at 8:30 Eastern Standard Time tomorrow, so make sure to watch out for those. But let's get back into what Raoul thinks is coming for this crypto market and why you shouldn't really be paying attention to these short-term moves. You may need to zoom out. Let's go ahead and see what Raoul has to say here.
My view is this space goes from 2.5, 3 trillion now. By the end of this cycle, it's 10 to 15 trillion. By the end of, let's say, 2032, just extrapolating the normal log trend of this, it's $100 trillion by 2032. That from here is $97 trillion of wealth that is going to come. This is the largest, fastest accumulation of wealth in all recorded history. Let's assume I'm a total moron, which is a good thing to do, and I'm wrong by 50%. It's still a $50 trillion wealth accumulation. That is the entire history of wealth accumulation of the S&P 500 and its market cap. So the amount of wealth that's going to get generated is going to get recycled into the space. People will buy high-end property in nice places, but a lot of people in this space won't go outside of this space, and it gets recycled, whether it's VC, whether it's the opportunities of building the applications layer, but really people seek trophy assets. And so I've just been buying as much trophy assets as I can for a kind of long 10-year time horizon, because I think this is the last chance you'll ever get to buy this stuff at the kind of prices it is. It's that
Hmm.
point in the cycle where liquidity comes in, where central banks need to refi all of the debt. It's when politicians bribe the people with plenty of candy. It's that moment that crypto tends to go vertical. And it's very cyclical. It's driven by this macroeconomic forces of this debt refi cycle. It affects all the asset prices over the time. But crypto is the one that goes truly bananas. So again, the simplest way is don't fuck this up. So just have a core portfolio, the big stuff, But if you get the other stuff right, you can make a lot of money in the other stuff. The 10, 20% of your portfolio, there's a bit more degen. That's when you're going to see some really interesting stuff. Now, if you go back to the classic banana zone from the last cycle, that's when Solana, Avalanche, Luna, and Matic came. And those, the performance in 1 year out of those 4 tokens was insane. We're going to see that repeat. Who's it going to be? What's it going to be? I don't know yet. But that's a game to be had in the banana zone. And it's part of the fun that you can actually degen in and feel like you've really nailed something. Because really most of the game is just doing nothing. When you narrow everything down, the outcome for everything is printing money. So the worse anything happens in the US, the more likely they are to print money. So election years tend to be very, very positive, and the year after for risk assets, just because everybody's buying votes and then kind of proving themselves afterwards and mopping up the pieces and paying that interest on the debt. So there's that military side. You've then got all the retirees with the baby boomers with all the votes. Well, they want their healthcare. And then the third part of the equation is somebody needs to pay the interest on the debt. And the only way of doing this is the magic money printer. You can see there's a shortage of dollars around the world, right? We lost US banks. We lost a giant Swiss bank. We're losing dollar yen, right? That's a shortage of dollars. And we've got Yellen going to China twice, right? She's there because her other job outside of getting Joe elected is to sell bonds. She's the Mike Milken selling junk bonds, going to China doing the roadshow. China's like, yeah, we'd love to buy your bonds, but we don't have any dollars. So you give us dollars and we'll buy bonds. So they have to figure out how that can be done. Now, nobody really wants to give China direct swap lines. They probably do it through Japanese bond intervention, by currency intervention. Either way, the G20's coming up or G7's coming up. There'll be some magical allowance for everybody to have enough dollars for the system to move forward and everything to happen. So there has been no independence since 2008. I think I don't think there's much independence between central banks either. I think the BOJ kind of taught everybody the trick. Everybody's followed suit. They've all got the same problems, which is the debt and the aging populations, and everybody plays the same card. And there's, the BOJ and the MOF, that they stopped being independent in the 90s, even though on paper they are. And so it is all driven by the Treasury and required to refinance this debt since 2008. But 90% of the entire option market is at Deribit. That's the entire option market of crypto, billions and billions of dollars. There's a risk there. There's a risk there because the amount of people who use that one counterparty as the centralized place for options, all the OTC options get laid off there. So that's another risk factor. We need more option houses, some exchanges, platforms, everything, just to stop concentrating it, because there's a lot of use of derivatives now in that part of the world, and we don't know who's going to end up holding the baby when it blows up.